Star Cements, and let's get in a quick corporate conversation going because cement companies are actually doing rather okay. Star Cement has particular news. It saw its volume rise in the third quarter, but realizations took a hit. The East India player also ramping up the capacity by 50%. Sanjay Kumar Gupta, the CEO of the company, joins us on the phone line to talk about these. Mr. Gupta, good having you. Thanks so much for joining in. Put this into perspective. What's happened is great. Sum that up for us. But what you did in the quarter gone by, can that get replicated in the current quarter or the quarters to come?
So the last quarter, in quarter three, we have done an overall volume growth of around 14%. Northeast was around 15 to 16%. The quarter four, the cement demand is good, both in Northeast and Eastern segment. And we hope to do even better quarter four numbers. So our expectation is that the quarter four overall number growth will be 20%.
You mean the volume growth, sir? Or the overall?
Yeah, the volume growth will be around 20%.
Volume growth will be 20%. And I have realizations picked up with such demand?
We have seen some price increase in Northeast of around 10 to 15 rupees. We also have seen some price increase in Bengal, Bihar, Jharkhand market. The prices have actually went up by around 25 to 30 rupees, but they have dropped back. So net impact will be around 10 rupees.
Net impact would be about 10 rupees. So with a 20% volume growth in quarter four and some price increases as well, and I'm presuming that efficiencies also kick into play, are we actually looking at a much better performance, though not comparable on a quarter-on-quarter basis, but a much better performance in quarter four, Mr. Gupta? Would that be a fair assessment?
So we have reported an EBITDA margins of around 1,300 rupees a ton on quarter three. We hope to report the EBITDA margin of around 1,500 rupees a ton.
Mr. Gupta, you said prices have gone up in both the regions where you have presence, Northeast as well as the Eastern region. But tell us, are these prices sustainable? Because I believe, especially in the Eastern regions, they've also come off from the higher levels that we've seen.
So going forward, we think that there will be good demand of cement coming up because in FY21, our expectation is that the overall cement demand growth in Northeast will be better than FY20. The reason being, three large states in Eastern India are going for elections. Bihar is due. Then in FY21, there will be elections in West Bengal and Assam. So that will lead to some kind of an infrastructure spend from the state government. So hopefully FY21 will be better than what we have seen in FY20. So on the back of the strong demand, we hope that the prices will be sustainable.
If you expect the demand to come back, then you also expect the non-trade orders to be there in the coming quarters?
In Northeast, we have seen some uptick in non-trade orders also. NHPC has floated a tender for their installed project of Subansiri, Lower Subansiri in Arunachal Pradesh. So that is a big project of around 2,500 megawatt. Hope once that is the construction of that undergoes, it will generate a good amount of cement demand for Northeastern sector. Overall, in the Eastern sector, there is uptick in infrastructure development in last quarter and also in this quarter. We hope till the season lasts, the uptick in infrastructure demand will continue.
Mr. Gupta, last quarter, I believe the trend was, of course, the volume growth went up for many players, but it was the realization sequentially which came off. What trends do you foresee in the current quarter, considering the prices have gone up, but it remains to be seen whether they can be sustained in the month of March or not? So what's the outlook on realizations?
See, our expectation is definitely there that the prices will sustain. Yes, there has been quite a few capacity addition in Eastern region. And there has been some consolidation has also happened. Imami going to Revoco will actually have some impact on the price stabilization. So our expectation is definitely there that the prices will not fall from here and will have an upward bias.
So in light of that, what would your realization trajectory be, Mr. Gupta?
So last quarter we had a net realization of around 6,100 rupees per ton. We hope that it will be somewhere around 6,200 to 6,300 rupees a ton for the quarter four.
Okay, just to get a sense of the pickup in terms of your total capacities and utilization thereof, you're saying the demand is starting to pick up. So would you be looking at increase? What is your total utilization, capacity utilization right now? And then would you spruce that up?
So we are operating at around 70% of our capacity. Our one plant, 2 million ton CWD plant, is starting in the month of March, end of March or early February, early April. So with that addition, we'll be seeing that is going to come up for the and that plant is going to operate for the full financial year in FY21. After that, we have plans of setting up 2 million ton clinkerization plant in Meghalaya. We will also add about 1 million ton of grinding capacity in Guwahati. We are also planning to set up a 15 megawatt waste recovery plant in Meghalaya. So we have around 12 to 1300 crores of investment lined up in next 24 to 30 months.